Good evening, students, and welcome to our class for taxation today. Okay, today we'll be looking at taxation of employment income. The last time we discussed this topic, we spoke about employment income as different from people who are vendors, people who are under contract of employment and contract for employment. We saw that when you are under an employer-employee relationship, you earn remuneration, while those who are vendors for themselves, they earn profits. We saw that an employee tax is based on actual year basis, while a vendor tax is based on preceding year basis. Okay, a vendor is required to register for VAT, while an employee is not required to register for VAT. We saw all that differences. We talked about types of employment. We talked about the Nigerian and the foreign employment. Then we spoke briefly about income. I made us understand that income can be divided basically into three. One of them is business income, which we have discussed when we talked about basis period and capital allowances. We talked about business income. Then we say employment income is another type of income. Now, both employment income and business income make up what we call the earned income. Then we talked about the unearned income, which is from investment. Now, investment income will be a different topic for another day. Okay, now we said employment income includes salaries, fees, wages, anything that you gain from being an employee. Okay, so anything that you benefit because you answer the tag employee, an employment income. And we divided them into two parts. One of them is cash emolument and the other is non-cash emolument. The cash emolument has to do with those things that are monetized, those things that you can get by way of cash. While the non-cash emolument is called the benefit in kind. Now, these are the things that you can put a monetary value on, but you don't get them by way of money. You get them by way of either assets or services rendered to you. Now, these include you are living in a house well furnished, you didn't pay the house rent. This is a benefit in kind. You have a car, official car. It's not you who bought it, but you're enjoying it. You have cleaner, gardener, and other people who are serving you. You are not paying them from your boss. Benefit in kind. Now, it's different from the way we value cash emolument. Now, benefit in kind are valued in such a way that if the asset is owned by the employer, then the employee is getting 5% of that asset as income in his hand. More especially if this has to be a car. You look at the 5% of the motor vehicle costs and charge it as income in the hands of the employer, taxable. Now, if it is something rented by the employer, then the amount of rent paid by the employer would be the taxable income in the hands of the employee. Then, if it is something, an accommodation that is provided for all the staff as a staff quarters, then there is no tax on that. But now, if it is an accommodation that is provided by the company, if it is an accommodation that is provided by the company and the company is letting the worker live there, then the rateable value of that apartment will be the taxable income in the employee's hand. And we said rateable value varies from area to area. I took an example of Lagos State. You are living in a 2-bedroom flat. The rateable value it will cost in Lekki will be different from Ikoyi, different from Ikosi, different from Ikeja, different from Ikorodu, different rateable value for the same size of house. So you see, this is what the tax authority used to base their assessment. Okay, then we talked about benefits that are tax exempt. We said any free lunch provided for all staff, it's not taxable. Uniforms for all employees, it's not taxable. Then expenses in connection with change of residence. Then we talked about relief and allowances. We talked about relief and allowances. What are reliefs and allowances? Reliefs are those deductions from your income that are not taxable. Now, this relief is trying to give you a relief from tax. Now, there are about 5 relief that you can be expected to exempt from tax. The first one is consolidated relief allowance. We call it CRA. Now, how do you calculate CRA? CRA is calculated as follows. You compare 200,000 naira fixed with 1% of gross income. Whichever is higher, you take that. After doing that, you add 20% of gross profit. Now, to make it faster for you, I told you that if you look at your gross income and you see it's less than 20 million naira, don't bother comparing 200,000 and 1% of gross. 200,000 will always be greater than 1% of gross. This is because 20 million is exactly 200,000 when you take 1% of it. And so 20 million becomes our cutoff. Once your gross income is 20 million and above, then you take that 1%. Now, because you're going to take 1% and you're going to take 20% again, you simply just take 21%. That's all. From 20 million and above, instead of splitting it and say, okay, 1%, then you do 20%, just take 21% and move on. But if it is less than 20 million, just take 200,000 and 20%, and you move on. Gross consolidated relief allowance will never be given to you. So it is your knowledge of taxation that will help you to determine that. All others will be given to you in the question, and when they are given to you, use them. National pension scheme, normally it's 8% for employee, 10% deducted from the employer. But in the question that will give you, use the figure they give you. If they just tell you employee was deducted, he enjoyed a pension scheme, and they didn't tell you that, they use the minimum appropriate by law. 10% for employer, 8% is what you would deduct from the employee. Now, we have the National Housing Fund. National Housing Fund is contributed at 2% of basic monthly salary. But anything they give you in the question, use that figure. We have the National Health Insurance Scheme, which is another. Use whatever they give you because there is no fixed rate. Then we have life assurance premium. Then we have gratuity. Then we talk about the rate of tax. This is where I believe we stopped. The rate of tax. We said that this tax rate will be given to you in the question. It ranges between 7% to 24%. So how is it being done? This is a part of what we call graduated tax rate. It shows that as your income graduates, your tax rate graduates. So this is how an example of how the rich pay more and the poor pay less. Now let's look at an example. If you have for the whole year you earn 300,000, you are going to simply pay 7% of it, which is 21,000. But what if you are earning 600,000? It means they will take the first 300,000 out of it and you pay 7%, which is 21,000. Then the remaining 300 will be taken at 11% and you pay 35,000. So 35,000 plus 33,000 plus 21,000 give you 33 plus 21 will give you 54,000. So that's how much you're going to pay, 54,000. Now look at it now. Somebody earning 600,000 and paying a tax of 54,000. And two people earning 300,000, which is still combined, still 600,000. Each of them paying 21,000. So we look at it, 21,000 times 2 will give you 42,000. So two people paying 21 will give you 42, while somebody who is receiving the 600,000 is going to pay 54. As your income increases, your tax increase. Somebody who is earning 1,100,000, it will be divided into 3. The first 300,000 at 7%, the next 300 at 11%, and the balance of 500. Now, what if you earn 3.2 million? You get graduated like that. So that's how we graduate the tax rate. Now, we look at the concept of minimum tax. What is minimum tax? Like the name implies, you must pay something. The minimum. How do we determine minimum tax? When there is no chargeable income of an individual. When you have no chargeable income. How is it possible that you may have no chargeable income? It means that when they bring your gross income, they now deduct CRA, deduct pension, deduct what again? Every other deduction, and your taxable income is 0, or it is negative, or you don't have any taxable income. It is less than 0. The tax office, the people, they will tell you that no, you must still pay something. They will not allow you to go like that. Normally in business, if it is business income, they will tell you to pay a minimum tax. Yes, that have stayed up to 5 years. From after 5 years, once you have stayed up to 5 years, you'll be paying minimum tax for business income, which we will discuss later. But for now, for employment income, your minimum tax rate is 1% of your total income. That means they'll look at your gross income and just look for 1%. So you see that 1% you are trying to compare with 200,000 naira that time, fine. That 1% could serve as a minimum tax when it is less, when your taxable income is less than minimum tax. So sometimes you see, when you look for minimum tax, when you look for your chargeable income and you could not get any, or when you calculate your tax and you find out that that tax, when you compare it with 1% of your total income, that your total income, that 1% is higher than that tax you calculated, the tax authority will leave the tax you calculated and take that 1% of your total income. Now look at the format for computing tax. First of all, you bring your gross emolument. You start with the cash emolument. You look at your salary, then you look at your pension received, allowances received, all the received. You bring them all together. Then you bring your benefit in kind. These are the ones that you did not receive in cash, it's been quantified in benefits. You add them up together, gives you your gross emolument. Now, when that is your gross emolument, you now look at income that are not subjected to tax. So you look at pension. Your pension received is not supposed to be taxed. And so you remove the pension again. But when you remove the pension, you only showed it here. So people will be asking, why are we showing it here only for us to remove it? We showed it here so that you fulfill the law of full disclosure of all incomes. So this is full disclosure. You disclose it here, and here you officially remove it. Okay? Then other non-taxable income. What could be other non-taxable income? Maybe you may also have received interest on what do they call it? Interest on loan. We learned that interest on loan and dividends on investment, the final tax that they suffer is withholding tax. So if you have shown them here, here is where you also remove them. Then you have your gross income. After getting your gross income, you now do with your relief. What are your relief? Okay, your relief are your CRA, which you calculate first, but before any other thing. Then you have your pension, which is second. You have your NHF and your NHIS, your life assurance, and your gratuity for the year. Okay, when you have that, you less it. Anything you get is your chargeable income, which we call your total income. Your total income. So what you now do is you start computing the tax based on your total income. So when you do that, you get your total tax payable. Then for those ones that are non-taxable, that you have suffered withholding tax, let's say your dividend and your interest, you now bring that withholding tax that you have suffered and you less it from your tax payable. That gives you your final tax liability. All of this will make sense if we solve a question. So let's solve this question. Question here says, Mr. David Olaleye retired from the employment of the Ministry of Water Resources, Ogun State, 2012. He was paid a gratuity of 4 million on retirement. So when was he retired? December 31st, 2012. When was he paid this gratuity? December 31st, 2012. So we have to tag this money with this year of assessment. He secured employment with Olac Limited on January 1, 2013. That means this gratuity of 212 will not come into the year of assessment 213. It would have been settled in 212. So he secured employment with Olac Limited on January 1, 2013 as a senior marketing manager on a salary of 8,400,000 per annum. Okay, so this is salary for the year. He is married with a wife and has 6 children. What information? That information, does it have any relevance to us? Previously, it would have, but now it is of no use. This is only telling us that he has dependents and he is entitled to, instead of those days they say dependent allowances and all that, the consolidated relief allowance has covered everything. His record of the end at the end of his first working year, which is 2013, because first working year is with Olac Limited, is what they are meaning. First working year in the new employment, which is Olac, revealed the following information. So everything we are talking about now is relating to 2013. So we know that this gratuity is not going to be among. So don't make the mistake of putting this gratuity because he was not paid in January 2013. He was paid in 2012. Okay, now he was given an official car with a market value. And moreover, even this gratuity was related to the old employment. And we're talking about new employment. Okay, so let's look at it. He was given an official car with market value of 2.5 million. What do we do with this information? This car has a market value of 2.5. That's a benefit in kind. So we look for 5% of that value of the car and we'll add it as part of his income. So his income is not just 8.4 million, no, it includes this car. Now, before we continue, let's look at the just concluded Big Brother Nigeria. Remember the winner, Mr. Lekon? How much was he given? He was given a cash reward and I think he was given benefit in kind. Now, the reason why he was given the cash reward is because the tax will be calculated based on that, and from there it will be settled. If they all give him benefit in kind, how would he pay the tax? Because it has to be settled. That would mean some of the assets will have to be sold for the tax to be paid. So, but they will give you cash big enough to take the tax, and they will give you benefit in kind so that you use the cash, the net of tax is what will be enjoyed by you. Okay, so let's come back to this question. He was given an official car with a market value of 2.5 billion. We know 5% will go off it. The company pays 820,000 per annum on his official accommodation. Two things. One, the company will either include this figure as benefit in kind for that employee because the office pays this on his official accommodation. That is the rent they paid. Now, this is subject to the rateable value of that house. If that rateable value of that house is given, that is what the tax office will be using. So we'll check if there's any rateable value But for now, let's use the 820 until we check if any rateable value is there. All right. He has a life assurance policy with Okonkwo Assurance PLC. The sum assured is 480, while the monthly premium payable is 4,200. What do we do? Which figures do we use? Sum assured. What is sum assured? Sum assured, this is the amount that you are assured to get at the end of your life assurance policy. This is what you are going to be paid at the end of the life assurance policy. Now, life assurance policy is an investment, and you get back your money at the end of that period. Okay? Now, this is the sum assured. This is not what will be removed as tax, as taxable income in his hand. No, the monthly premium, that amount that goes away from you monthly. So what you do now, this 4,200, you multiply it by 12, because everything here we want to gross them up yearly. So once you see monthly, you multiply by 12. Here says he contributes 20,000 naira monthly to, and you must see approved pension scheme. So if it's approved, you multiply by 12. Okay, so we were not told what is the what is his rent, what is his basic and housing and transport, because most times we compute pension based on basic housing and transport, but we are not told, but we are told he contributes 20,000 monthly. So let's take it like that. He spent 17,000 naira during the year for the upkeep of his two aged parents who have no source of income. What do we do with that? We ignore it. Why? Because he will be given consolidated relief allowance. And so that covers for anything he's taking care of for his parents or any dependents. So anything that has to do with dependents, any figure attached to it, just ignore it because of consolidated relief allowance. He contributes the sum of 15,000 naira per month to National Health Insurance Fund. This is approved. So what you do, you multiply this 15,000 by 12 and 20,000 naira per month to the National Housing Fund, multiply by 12. So you see the ones you bring in gross, that's already in yearly figure. Then you also bring the one that are in monthly figure and convert monthly to yearly. So now let me get the solution ready for you so that we can begin operations. Okay, so let's begin operation here. This question, so let's get it started. All right, so solution. Mr. David Olaleye. So what do? We start by analyzing everything. We've analyzed everything. So let's bring out the points. So we start with, from the format, we start with the income. Income, what are the income? We have salary. Let's take them after one after the other. Salary is 8,400,000. We bring it down here, 8,400,000. Is there any other benefit? Is there any other cash benefit? No other cash benefit is stated here. So apart from salary, the other things are benefits in kind. So there are two benefits in kind. Official car, I told you we take 5% of 2.5 billion, which is 125. Then is official accommodation. The company pays this as rent for him. So that should have been coming from his money, but it's not coming from his money. So it's like an additional salary given to him. So when you add 820 to 125, it becomes 945. 945 is the benefit in kind, and this is the cash emolument. Add them together, you have 9,345,000. That is his gross emolument. This is what he takes home as an employee. All right. Let's look at his relief. The first one is consolidated relief allowance. We said it is never going to be given to you. You will use your sense to look for it. Now, we have to take a higher of 200,000 and 1% of your gross emolument, whichever is higher. So 200,000 is higher. I told you, instead of doing what I just did, I have to do it like this for the sake of showing you that law. What you just do is look at this figure. If this figure is less than 20 million, don't bother doing this comparison. You just take 200,000. Then you do the second one, 20% of 9.345 million. So you have added 20,000 plus the 200,000 rather, plus the 20% of that figure to give you 2,069,000. Now this is your CRA. So based on 9,345,000, they are removing 2,069,000 from it. That this part should be relieved, not taxed. They want you to use these ones to take care of your siblings, your aged parents, anything that is anybody dependent on you. They're not going to tax this amount. That is what the law says. Now, we'll go to the next one that is relieved, your contributory pension. Normally, pension is removed at source from your money. So that money they remove at source is to be relieved. Forget about the part that I wrote minimum contribution as this. Forget about this part. I'm just trying to show you an illustration that you usually calculate 8% of the income. Forget about this. I told you, forget about this part. Use this one as what the question gives you. So use this. All right. Now, the next one is National Health Insurance Scheme. We said 15,000 multiplied by 12. National Housing Fund, we use this to multiply by 12. And that's all. Okay? There was an oversight here. I omitted one, which is life assurance. Yes, I omitted it. It's a slight omission. So you just do the workings there and just say life assurance. You put the value multiplied by 12 and put the figure here. That means this figure will change and this figure will change. But let's take this like that because we are not all about figures. We are all about method. So in an exam, because you omit just that one, that is the one, that is only that one you will score. But they will marking you correct based on every other thing. Because you missed that one point, that is the only one that you'll be marked wrong. So don't look at it that because you missed that one, every other thing henceforth will be wrong. No, they will keep marking on the strength of they are following your workings. They are following your workings. So give clear workings. So let's follow this working. Let's assume that that information does not exist. Okay, now let's look at the tax computation. We're trying to compute a tax on 6,616,000. So what do? We know that since this is more than 3.2 million, we'll reach the end. So let's see how we do it. The first 300,000 out of it will be graduated and taxed at 7%, which is 21,000. Next, we have 300,000. Next 300,000 to be at 11%, which is 33,000. We take the next 500,000, becomes 75. Takes the next 500,000, becomes 95. At this point now, okay, take the next 1,600,000, becomes 336,000. Now at this point, when we just take this 1,600,000, we would have done 3,200,000. So let's confirm. 300 plus 300 is 600. If you add 500 to it, becomes 1,100,000. You add 500,000 again, it becomes 1,600,000. You add 1,600,000, it becomes 3,200,000. So you have done 3,200,000. Now, what is the balance? Because we have done 3,200,000, we are going to deduct this 3,200,000 we've done from the total figure of 6,616,000. So that would give us 3,416,000. You multiply that by 24%, and you end up with this whooping sum, 819,840. So when we do that, you add everything together, you have what they call this. This is your total tax payable annual. So that's your tax payable annual. So the question also said, okay, I just went further to show you that if you are asked to look for monthly tax, you divide this your annual tax by 12 to give you a monthly tax. So this is what he pays annually. This is what is being paid monthly. So that's that for that question, for that particular question. So we move to another question to see how we can still apply this same principle. Paying number 2, question number 2. Okay, Mr. Richard Brown, an employee of Crystal Oil Limited, has the following salary package for the year ended December 31, 2013. What does that tell you? It tells you that we are looking at 2013 year of assessment, actual year. Now look at it. Salary 6,500,000 per annum. That's a cash emolument. Enjoy the services of 2 domestic servants, benefit in kind, and a night guard, fully paid for by the company, benefit in kind. Domestic servants, we are paying them 200,000 each. Since they are 2, you multiply it by 2. The night guard is just 150,000. You use that. These are yearly figures. Okay? Now, collected a sum of 88,250 during the year as reimbursement of traveling expenses for visiting oil fields. What does that tell you? This man made an expense out of his pocket, and this money is a reimbursement to it. So does it appear? It doesn't appear. It only affects the company's income, that they will take it as expenses. For the employee, it doesn't reflect because that's the expenses that is supposed to be borne by the company. So you're not going to put it as income to him, nor as expenses to him. Now, 8 free meals worth 52,500 naira from staff canteen. This only affects the Sorry, my phone, somebody was calling my line and it made my network went off. Sorry. All right. Now let's continue analyzing. We said he's going 450,000 naira per annum. This is how much he is supposed to be taking into his salary as benefits in kind. But we are going to look at it subject to what is the rateable value of that housing in that area. Now, use an official car purchased at a cost of 3.4 million. We know we are going to take 5% of this, right? He is married with two children, with two children of school age. We know that it doesn't concern us. What concerns us is relief, CROA. Anything that is used to take care of this is from CROA. Has an aged mother, same CROA. So we ignore this. He paid the sum of 48,000, 162,500, and 487,500 as life insurance premium, National Housing Fund contribution, and pension contribution fund, respectively. We will take those ones. These are yearly figures. And look at this. The rateable value of his residence is 250,000. So we'll take this figure in place of this 450,000. All right? Now, calculate the statutory total income of Mr. Richard Brown. When we say statutory total income, we are talking about his gross emolument. Gross emolument. Okay, so now let's look at his gross emolument. Okay, Mr. Richard, he has a salary of 6.5 million. We saw it from here, 6.5 million a year. That's good. That's the only cash benefit he collects. The next one is benefit in kind. It's 2 servants, 200,000 times 2. Forgive my 400 here is supposed to be here. So forgive the orphan movement to that side. The night guard is just 150. We remember that, yes. Then we have official accommodation. I said we are going to use a rateable value, 250 instead of 450. Then we talk about his official car, which is bought for 3.4 million. We are taking 5%. So all these are benefits in kind. Here is 170. You add everything with the salary, cash salary, everything gives you 7,470,000. Now that is his statutory income, or we call it here the statutory income. I said the gross emolument is the statutory income. Now the next thing we are asked to do here is to calculate or determine his taxable income. For us to determine his taxable income, you must remove the relief from his gross emolument. So let's look at his relief. The first one, which will never be given to you, is CROA. And I said CROA is going to be 200,000 plus 20% of the gross income. So that's it here, gives me 1,694,000. Contributory pension, please do not mind this my analysis here. Do not mind every other thing I wrote here. Pick this actual one given to you and take it. And you see, I have taken it down here. Now the third one is life assurance. They gave you actual, and National Housing Fund, it was given to you actual. So you add these 4 items, gives you this 2,392,000. Remove it from your gross emolument, and its taxable income is 5,078,000. That is the second step. Now you see, this question can become a question number 1 question, but you see how easy it is to solve it. You can solve it in the next 10, 20 minutes. The third thing here is to compute his tax payable for the year. That means you have to look for his tax. Now, how do you look for his tax? This is his taxable income. All you now do is to break them down. Break them down. The first 300,000 at 21%, you go all the way because this is more than 3.2 million. We know we are going to reach all the way to here. So let me discuss about here because here you would have been taking everything. By the time you take the last 1,600,000, by the time you take the last 1,600,000, you would have taken. Now, let me give you one trick in case you are in exam. The moment you see that this figure here is more than 3,200,000, simple trick. If you have calculated this down to this 21, 33, 75, everything here gives you 560. Everything here gives you 560. So once you know you are going to reach the end, just have 560 set aside instead of starting to do all this. Simply say, just do the last one. If I were here, I would just say the first 300 to the first 3,200,000. I will just put 560,000. May not bother with all this. That's if there's no time. Now, if there is no time, then you come here and do the last one. The total figure minus 3,200,000. Anything you get, you multiply it by 24. When you get this figure and you add it to 560, you are going to get this figure. This 560 figure, I'm just telling you, is going to only to be applied when there is no time and you have many things to do. So even if there is time, you can just write your 560 and keep all your space down. So you just do the last one, add 560 to it and get your total figure, and you just start putting these figures because they are repetitive. So if you are familiar with them, you will not be using calculator to start calculating them. You just be fixing the figures because you are familiar with them and they don't change. So that's all for question number 2. Let's see if we have question number 3 so that we can, let's see if there's question number 3. Oh yes, there is question number 3, which happens to be the last question. Okay, Mazi Okoye is an employee of XYZ Limited in Port Harcourt, Nigeria. Okay, now one thing we need to know is if another question could come, which is his tax authority? Where is he going to be paying his tax? He's going to be paying his tax where he is deemed to be resident. We said about residency rule before that an employee is deemed to be resident wherever his office is based. Okay, so now let's look at this. Although they are not asking this, it might just be a question that may be asked. Mazi Okoye is an employee of XYZ Limited in Port Harcourt, Nigeria. The following is his income that accrued to him in 2013. And that means this is actual year basis. 2013 is the year of assessment. The following things relate to 2013. Let's look at them. Basic salary, this is 1,500,000. Housing allowance, this is part of cash emolument. Transport allowance, this is part. Leave subsidy, this is part. Meal subsidy, this is different from free canteen meal. So meal subsidy allowance is part of the income in his hands. So all of these are cash income. Now, additional information, he has 2 wives, and 4 children, age 18, 15, 12, and 10. You know what to do with this? It's not useful. We only know that he pays an annual premium of 100. He pays an annual premium of 187,500 on his life assurance policy. this is allowable on him. He contributes 2.5% of his basic salary to the National Housing Fund. So you see why they gave us this breakdown is for us to calculate National Housing Fund and pension. Okay, they told us the rate to use 2.5. They gave us 2.5 of this figure. And they said 7.5% of his monthly emoluments as defined in the Pension Act. Now, monthly emolument, it means all of these total. One group of people will say, find his total cash emolument and benefits in kind. Okay, total cash emolument and use 7.5. Another school of thought will say, no, use his basic housing and transport. You add them together and look for 7.5. Okay, so he received investment income net of withholding tax as follows. Year end December 31 and 2012 and 2013. Rent on his property, dividend. Now, compute the chargeable income of Mr. Mazi Okoye and compute his tax payable. Now, this is an assignment to you. But now let me help you with the assignment. You already know many of All right, so let's start. If you are with your calculator, follow me along. We want to calculate his chargeable income. We have basic salary of 1,500,000, housing allowance. We have our 1,125,000. We have our transport allowance 375. We have our leave allowance of 250. We have our meal subsidy of 150. Cash emolument is 3,400,000. 3,400,000. That is our cash emolument. So note it down somewhere. 3,400,000 cash emolument. I'm noting it down somewhere. 3,400,000. Hold on. 3,400,000. Now, the next thing to do is there is no benefit in kind here. There is no benefit in kind. Now, what only happens here is he received rent on his property. That's an income. And dividend on his investment. That's an income. Now, the thing about this is that although the next class we are going to be taking investment income, but I will tell you something here so that you can solve this. Or rather, we will return to it when you finish that. Now, employment income is based on actual year basis, while investment income is based on preceding year. So they are just giving you this 213 and 212. This 213 is just to deceive you. Don't take anything on 213 because we are in 213. You should be looking at preceding year. So you look at this year ended 2012 and you are going to take the preceding year. Secondly, they told us that he received investment income net of withholding tax. What does that mean? It means that he has received net. Withholding tax is removed from it already. When you are recording it into your financial books for tax purpose, you have to gross it up. make it back to gross. Okay, normally on property rent, if we are not told this language, net of withholding tax, if this was missing, if we are not told net of withholding tax, always assume it was gross. For dividends and interest, if you are not told this, always assume it is net. This is because by law, they are supposed to pay you net. No company will pay you a dividend in gross. They are going to pay you in net. And most times when you're paying your landlord rent on his property, he collects gross. Normally by law, you're supposed to deduct and pay him net. So what this question is telling you, that this person, Mazi Okoye, is a landlord and an investor, but now he has received this property as on net. So how do you gross it up? Property, rent, and dividend and interest, their withholding tax is 10%. That means 10% would have been off this. So this 675,000 represents 90% of the gross. This 675,000 he has received is simply 90%. How do you know the full figure? Simply say 675,000 divided by 0.9. That will give you 750. If you cannot remember that it's divided by 0.9, simply say 675 divided by 90 multiplied by 100. That will give you 750. So that rent is 750. They took away 10%, which is 75,000. That is why it is giving you 675. So 750. Now look at the dividends. The same thing, 250 divided by 0.9 will give you 277,777. 277,777. Now, if we add 277,777 plus 750,000, and you add it to 3,400,000, that will give you 4,427,777. So let me just write it here: 4,427,777. Okay, now it's done. Now you've known his gross income. The next thing to do is you look for his benefits in you look for his relief. The first thing to do is to calculate his CROA. So how do you do that? You look for, this is 4.24 million, so it's not to 20 million. So simply look for 20% of it, and you add 200,000 to that. That gives you 1,085,555,000. When you do that, you look for his before you look for all that, you need to minus income that are not taxable before you start doing relief. After getting that 4,427,777, you need to remove those income that is not taxable, and that is dividend. So what you had before was dividend was 277,777. So you remove it now, minus 277,777. It becomes 4,150,000. That is your gross income, 4,150,000. So that's what you're going to use now. 4,150,000. You look for 20% plus 200,000. That will give you 1,030,000. That's your CROA, 1,030,000. So let's remove the CROA, 1,030,000. Okay. The next thing is your your premium national life assurance policy. That was 187,500. You remove it, 187,500. Okay. The next one is your national housing fund. We say it's 2.5. So we say 2.5 divided by 100 multiplied by your basic salary of 1,500,000. That will give you 37,500. So you remove 37,500 to it. Okay. We now also have 7.5 of monthly emolument. Monthly emolument multiplied by 12 is gross yearly emolument. So let's use 7.5 of his monthly emolument as contained in the contributory pension scheme. So what we normally do, we'll say 1,500,000, which is his basic salary. Take your housing, 1,125,000. Okay, then you take your transport allowance, which is 375,000. Everything you have is 300,000. Look for 7.5%. 7.5% is going to give you 225,000. 225,000. So remove your 225,000. Okay. Then we have I think that's all about that. So when we do all of that, we have 2,670,000 naira as his taxable income. 2,670,000 as his taxable income. What does that tell you? It's less than 3.2 million. So we're not going to reach the end. So we'll be taking it slowly, slowly, slowly. So the first 300,000 will give you 21%, 7%, which is 21,000. Okay, let me go to the tax rate so you'll be seeing it. The next 300,000, the next 300 naira, 11%, which is 33,000. So if you look at it, 300 plus 300, we have reached 600. The next 500,000 at 15%, 75,000. So if we add this 500, we have 1,1. The next 500,000 at 95%, 95 at 19%, which is 95,000. That will give you 1,600,000. We cannot go to this next 1,600,000 because after taking 1,600,000 and we are supposed to do 2,670,000. Let's sit there and see how many will remain. 2,670,000 minus 1,600,000, it means the remainder is 1,070,000. So instead of saying the next 1,600,000, you simply say the next balance of 1,070,000. So you say 1,070,000 multiplied by 21%. That will give you 224,700. Now it means that here is 224,700. You start adding plus 21,000 plus 33,000 plus 75,000 plus 95,000. That will give me 448,700. That is his total tax. Sorry, this page I'm showing you is not his tax. We didn't solve this one here. I'm just showing you the tax rate so that we can use it to solve this question. Now his tax payable is 448,700. But note one thing. He has already suffered withholding tax. He has already suffered withholding tax. We are supposed to now less that withholding tax. So what is the withholding tax that he has suffered? Now let's look at this figure. We have that 675. We know it was 750,000. That was the gross. And this 250,000, we know it is 277,777. When we add them together, it is 1,027,777. What is the withholding tax is suffered on it? It's simply 10%. 10% will be 102,778. So what you will do is you will now less that withholding tax from this. So you will say 448,700 minus 102,778. That will give me 345,922. That will be his tax that is going to be paid for that year. Mind you, is full tax minus the withholding tax already suffered. So if you notice what we did here, with one of the difference between what we have been doing before and now was his basic salary was used to compute National Housing Fund, 7.5 of his monthly, they said monthly emolument, and we are using yearly figure. So you cannot use monthly figure anymore. You have to cross up the monthly figure to yearly figure. So we use 7.5 of his yearly basic housing and transport. Then we talked about net of withholding tax. Now, this withholding tax on rent and property is 10%. So it means that whatever they have paid you is 90%. So you need to gross it up to get 100%. And we mentioned another thing that it is on preceding year basis. So you don't look at the 213, which is actual year basis. No, you look at 212, which is preceding year basis. And so you use the figure on preceding year basis. After doing that, you recognize that dividend is only supposed to suffer withholding tax. So you've shown the gross dividend that he is receiving, then you need to remove that gross again to show that that dividend should not suffer further tax. And that is where you get your gross income. It's that gross income you use to calculate your CRA, then all other deductions are being made, you get your final taxable profit. And when you look at your taxable profit, you start graduating the tax, and you get the final one. Remember, you have suffered withholding tax on rent. You suffered withholding tax on dividend. So look for the withholding tax and simply less it from its total tax payable. That will give you the tax you're supposed to pay for 2013 year of assessment. So far, so good. We've looked at various sources of income that an employee would aim if he's in an employment. We saw the income that was exempted from tax and those expenditure that are given as relief. Then we saw how we can deal with benefits in kind, how they are taxed, how they are assessed. Then we noted that the basis period for computation of payee under contract of employment or salary employees is the actual year basis. Now, the tax people will tell you that prepare your tax and show all income from all sources. So it is possible that somebody who is earning salary can be doing investment and also be earning business. Because in one of the questions we're going to learn, you will see someone who is a salaried person having a business as a sole proprietor, also having investment income. So how do you do that? You cross everything and charge one tax. And when you charge one tax, that's all. But you'll be asking, your business name has its own business tax. If you are doing a sole proprietorship, you'll be doing your business separately. If you are doing if you are into what do they call it, employment, you do your employment income separately. Now, if you are doing investment, you cannot just do investment income separately. So normally, you are supposed to have a personal tax identification number. Okay? So all you do now is you gross everything. Now it is in your name. your employment income, your business income, every other income, you show them together, then you remove, you find the total tax. When you find the total tax, then you remove whatever you have suffered from employment, remove whatever you have suffered by withholding tax, then you pay the tax, the balance of tax to the tax authority. Now, normally your business name will have its own thing. Your personal name will also have your own thing or tax ID. You can go to the tax office and regularize this and make payment as at when due, and they will give you a tax clearance certificate on your name. So, thank you so much for coming to class and for learning this. So I want you to practice this because this will never escape in your exam. You must say personal income tax payee. All the things you've been learning so far, you find one way or the other in your exam. So take your time and review all the things you've done. In our next class on Monday, we are likely going to look at investment income. Thank you so much once again, and see you in the next class. Have a nice day.